Another day and another high for the Indian stock markets. Priyanshi joining us with the latest. Lots to talk about, Priyanshi. The rupee also gaining. Oil prices now at a bit of a low. What are we hearing?
That's right, Ankita. The last few sessions have been great for the markets, and Sensex and Nifty have both touched a record high today. And for the last 6 sessions, we're seeing that markets have been gaining, and Sensex and Nifty have gained for the 4th straight session today. Sensex has gained over 200 points, and both Sensex and Nifty have gained 0.4%. Now, if we tell you about the reasons, one major reason is the foreign fund inflows that we're now seeing that are proving to be a major boost for the Indian markets. Remember, for the month of September and October, both foreign investors were taking money out of the Indian market. So they were net sellers in Indian markets. But in the month of November, they've turned net buyers. So after 2 months, for the first time, foreign investors have turned net buyers in the Indian markets, which proved to be a positive signal that foreigners are coming back to India and they're investing their money in Indian markets. Foreign investors have invested to the tune of 32,300 crore rupees in Indian markets just in the month of November. So it's the highest investment. It's the first positive investment that we've seen in the last 2 months. So that definitely is a major signal that is boosting the markets right now. Now, if you talk about other reasons, why are these foreign funds really coming back to India? One of the reasons, primary reasons behind that is an expectation of a lower interest rate hike. Remember when inflation was rising, central banks across the world were increasing interest rates to control that inflation. Even in India, the Reserve Bank of India announced consecutive 50 basis point rate hikes. In the United States, the Federal Reserve announced 75 basis point rate hikes consecutively. Now that inflation has come down in the United States below expectations, in India as well, it's now under 7%. There are expectations that inflation might have peaked. So there are expectations that inflation might be on a consistent downward trend now. Because of that, there are expectations that the interest rate hikes that were being announced that might come down now. They might not be as sharp as they've been for the last few months. So that is helping the market sentiment. When interest rate hikes are announced, they definitely bring down the markets as they leave out less money for investors in the market to invest. But now that those interest rates are expected to go down, investors are putting their money in more emerging markets, because when interest rates go up, it's the cost of your borrowing goes up. So investors really consider twice and really consider risky investments in emerging markets such as India. But now that expectation is going down, they are considering and they are investing in economies like India. So that is one of the reasons why India is coming out as an outlier in terms of global markets, as we're seeing that global markets have seen a sell-off after the protests in China, in the United States, in Europe, in Asia, Shanghai, Hong Kong. Those markets were in the red after the protests in China. US markets, in fact, fell over 1.5% yesterday. So Indian markets are defying all of those global trends because of these reasons, because of these macroeconomic reasons, because overall Indian markets are emerging stronger. Another point to highlight here is the oil markets that we've mentioned. Oil prices have been going down because, remember, China is the second largest consumer of oil in the world. And with China being under lockdown, there are expectations that the industries are under lockdown, the residential areas are under lockdown. So there are expectations that the demand for oil from the second largest consumer might come down. And as demand for anything comes down, the price comes down alongside. So that is why the price for Brent crude oil and global crude oil is falling because of this expectation. Crude oil prices have fallen by 13% in just a matter of the last month. They're now at the lowest level that they've been since the month of January, after they witnessed an upward trend after the war. But now they're trading at $83, $84 per barrel compared to a month ago when they were at $94, $95 per barrel. So that's the trend that we're seeing in oil prices as well. And falling oil prices benefit India because we import more than 80% of our oil. So falling oil prices also can be seen as a boost to the Indian markets because our import price turns out to be lower. So those macroeconomic indicators, strong foreign fund inflows, expectation of lower rate hikes, and falling oil prices all are emerging as reasons because of which India is emerging as an outlier and defying the global downward trend in terms of the market.
All right, Priyanshi, thanks very much indeed for joining us with those details.